Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Friday, September 22nd, 2023. Before I click through all the charts, just want to encourage you to please click like if you haven't already, share the content with friends and colleagues, become a Wicked Stocks YouTube channel subscriber, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Apple report, daily analysis in the SPY and the Triple Q, that is the S&P 500 and the NASDAQ 100 ETFs. A lot of action going on there in the last week or so. I don't need to tell you that, I don't think. Also, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or better on those underlying stock picks. And this week alone, we put out 2 stock picks, one on FedEx that's already playing out nicely, and Thursday we put out Borg Warner. That is a timely analysis you may want to check out. You can see all that for free. Just sign up for wickedstocks.com. We offer a 5-day free trial up front. You can check everything out. If you like it, you stay on board. If you don't like it, you can cancel your subscription at no cost to you whatsoever. On with the charts. And this is just a reminder that in May we settled above this long-term channel top at 167.99, which I still consider able to contain selling well into next year, and that this sell-off we've had for the last couple of months is nothing more than a counter-trend sell-off, one to be bought in the upper 160s. Once tested, we can rotate up to new all-time highs and then some into the 227.19 region and climbing by this point next year or sooner. That is the big picture. Now, let's take a look at the daily chart, and I will show you 180.37. I don't see that today. If we push or open above 176.09, which is an upside 3/8 Fibonacci over the last couple of days, not too far different than our 176.30 high that was put out on Thursday. You may round up to 176.30, and I'll say that if we break to new lows today, like for instance, let's say that early in the day, we fall to 170, 196 and bottom out there, on the way back up, I would suggest changing this to 176.30. Nothing more than Thursday's high. Under that scenario, breaking back to a new pullback low and then to rally back and actually close above 176.30. I could have changed this to 176.30, but I decided to keep it at 176.09. There's a few things going on in that vicinity, but I will say, let's just say that closing above 176.09 or 176.30 would then indicate this 180.37 formation Monday, Tuesday of next week, where we could top out through next week, and below which I say the selling pressures can build. Holding below 180.37, I maintain a 2 to 3 week objective downside at that 167.99 formation I showed at the top of the video, down to 165.21, this descending 3-month channel bottom. This area in the mid to upper 160s, well suited to contain selling not only through October, but through the rest of the year, and we can come off of this area nicely in the weeks following a test, in the months following a test of 165.21 to 167.99. Downside today, 171.96, nothing more than the August low, in reach and able to contain session weakness. If we close today below 171.96, we continue south into that region that I can show here on this chart. 169.94 is a 3/8 downside Fibonacci. I think that is really all the way down to 165.21, kind of a wide zone. Now, day traders, that's just too wide of an area, of course. 4.5 points wide to buy and sell into. You have to pick your points, of course, but I'm speaking really to the longer term swing traders, the 2 to 3 week position traders, the 3 to 5 week swing traders, 3 to 5 month near term investors. We can test that 165.21 to 167.99 region and once again come off of there nicely, and the chart would still look like this. We can bottom out here, rally up to new highs, and then some as we move on through the rest of the year and into next. And in terms of the upside buy signal, I'll take you back to this chart here, 180.37. If we close above 180.37, I do think we've got a 2 to 3 week rally up to 191.18. 191.18 can absorb buying. I have 191.08 here. I'm not quite sure if it's 18 or 08. It doesn't really matter now anyway, because we're certainly not going to see that today. But if we close above 180.37, 2 to 3 week rally to 191.08, 191.18, where we can top out through October, possibly into November, fall off again from there. We could get into a kind of a wild and wide consolidative two-sided framework, after testing 191.08. But it would be closing above 191.08. That would tell me we've got a good low for the year, and we should, within 2 to 3 months, continue on up to new all-time highs, the 210.96 formation then expected within 2 to 3 months. But that's just sort of the big picture painting. I guess what I'm saying here really is if you are a 2 to 3 week trader, if your positions are several weeks and out, you're interested in selling the market, it's 180.37. If you're interested in buying the market, it's above 180.37, or holding below 180.37, you're patiently waiting for the mid to upper 160s. If you're a 2 to 3 week swing trader, maybe you're short already, as we attempted to push into this area a few days ago, anticipating 165.21 to 167.99. And inversely, if we close once again above 180.37, we have, really a 2 to 3 week buy signal. That is your next play, 2 to 3 week traders, for going long up to 191.08. I'm going to leave it at that. I think that that's really all that needs to be said. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Apple Report. You have a great weekend.